Good afternoon, everyone. In this live event, I actually want to show you and explain how to use the Nadex spreads. Now, during this live event, we're actually going to be focused on buying a Nadex spread. So if you look over here to the left-hand side, you can see it lists the indices spreads. I have chosen the 1 p.m. to 3 p.m. And the next thing I would want to notice is the price. This is at 467. So you have two prices listed here, one on the left and one on the right. You can also see that this is for the Wall Street 30, which equates to what uses the underlying Dow Jones. So in this case, I want to choose a spread that either encompasses where that market is trading or go one spread up. Now, to determine that, I'm going to click on the chart. And in this case, you can see right now it's trading at 25,470. And this is a daily chart. I'm going to change it over to 15-minute chart. And you can see that right now it is going down. But what I really want to do is actually see the high, low, and close data. So on this one, it's about 30 points. This is about 15, just about 15. So we're moving about 15 points with the exception of this bar, probably in this one over here. Now, in this case, it looks like it's going down. So I'm going to wait until I believe it's going up. And in the meantime, I'm going to be analyzing these spreads. So right now it's 453. So I'm more than likely going to be using either this spread or this one. So let's see what it's going to do here. And let me close that real quick. Now, what some people don't understand about the spreads is when you're trying to go long, which is the focus of this video, is to go long, you want it to be at a support level. Why? Because you want it to go up. Why do you want it to go up? Because the number on the left is actually called the floor price. The number on the right is actually called the ceiling. Now, the floor price should support price. So in this case, when I said I was looking at the 25,421, if I stretch this out and draw a horizontal line on here, we're going to put it at 425, or as close to it as I can get. I'm not going to be real particular. I'm going to edit this so that it really kind of stands out at you. And I want this to be dark blue. No, we'll do it green. Not that the color matters. So when you're looking at this and you're saying, okay, how do these work? Okay, the floor on that is 425. The ceiling is 25,525. which I'm going to have to put the open, hold on, close back on. Let's see. Okay, take that one off. We're going to put another horizontal line on here. And we want it a little bit lower. So we'll put it there. And in this case, I'm going to make this red. And there's a reason I'm going to do these colors. So give me a minute. Okay, so this is the actual spread. Now, if I'm going long, which is the purpose of this video, this green line will limit my risk. In other words, even though the current offer price on this spread is $4.62, even if this market drops all the way down here, it does not matter because this green line limits the risk. So in this case, I'm going to click on this and it's going to be $36 of risk. Okay. And there's a profit potential of 64. And evidently I waited too long, so I'm going to have to go back in here. Okay. So now I'm in it. You can see here the average price is $4.61. So what I'm going to do now is put another horizontal line that's actually going to represent where I entered. And it's not there. It's just about there. And this one I'm going to make we'll make it pink because we don't have a lot of colors here to select. So in this case, my actual risk, okay, is the difference between 461 and 425. Okay. That's what my actual risk was, which was $36. My profit potential, on the other hand, is the difference between where my entry was and the top red line. Okay, this is called the ceiling. This is what's going to limit your profit potential. Does everybody understand that? So the floor is where I'm going to buy. And the ceiling is what is going to limit my risk. Now, let's say, and this is really what I love about the spreads. Let's say that price just kind of hangs here and closes at 462. Okay. In that case, because my entry price was 461, then I made a total of $1. Okay. The exchange fees round trip would be $2. So you come out with only $1 loss. If this moves all the way up through that top red line at 25,525, then I have made the full width of the spread. Let's say that it goes to 25,460. Okay. Then I have lost the difference between 25,460 and 25,425. Okay. And, it's variable. It's not like a binary where it always pays out either $0 or $100. It just depends on where price is at expiration. And in this case, it's got an hour and 21 minutes until expiration. Now, the one thing that a lot of traders don't realize is that when you're trading spreads, what you want to happen is for volatility to be in the market. What is volatility? It's really just movement. You want a lot of movement to trade spreads. You want to know, hey, this is going to move. You don't want it to just sit there. Of course, if it does sit there, then you'll just lose based on where price is at expiration. So let's just watch this a few minutes and see what happens. Now, some of you may be wondering why I chose the Wall Street 30. It's actually quite simple. I chose the Wall Street 30 because it's $1 per point. It makes it very easy to calculate the actual spread. Now, with the US 50, the US Tech, each one of these markets will be different. But again, if you go over to Nadex site and just go to nadex.com and then go to markets. And for example, we're doing the stock indices. So I'm going to click on that one. And if you go down to stock indices contract specifications, then this is where you can see tick size is 1, tick value is $1, minimum increments 25. On the spreads, US stock indices, okay, this is where it's going to be slightly different. $1 is equivalent to the tick size. So in this case, the Wall Street 30 moves in points, okay, and it shows you that right here, whereas the US 500 moves in 0.1. So that means if you have 0.1 is the tick size, and it moves a full point, that would actually be 10 ticks. Okay. On the US Tech 100, same scenario. On the US Small Cap 2000, same scenario. It's 0.1, 0.1, 0.1, 0.1. If you go to the FTSE 100, again, you go back to 1, not 0.1, but 1. If you go to the Germany 30, which I like to trade, it's 1. For the Japan 225, again, it's 1. They also give you the hours for the spreads. They list the first expiration. So in this case, the Germany 30, that uses the underlying DAX. So it begins at 8. The first expiration is 10 a.m., 11 a.m., 12 p.m., 1 p.m., 2 p.m., 3 p.m., 4 p.m. On the FTSE, you have 10 a.m., 11 a.m., 12 p.m., 1 p.m., and 4 p.m. Notice there's no 2 p.m. and there is no 3 p.m. expiration like it is on the Germany 30. And again, you have to go and investigate the market that you are looking to trade. The Germany 30 is very reminiscent of it reminds me a lot of the Wall Street. So you can come over here and you see that it's trading at 586. If you're looking to go long, okay, you want one that is close to this number, and it has to be on the left side. So I can already tell you it's the 575. So if you just click on that, then you're going to see you're risking $14 to make $36. And I'll go ahead and do this one because I'm in my demo anyway. And we're going to put lines on it just like we did over here. Again, this video is focusing on the long spreads. So let me get this one up. And we'll do exactly the same thing for the Germany 30. It's 575. And I'm just going to get rid of the stochastic so we have more room on the actual chart. We're not learning about stochastics today. Drawings. I believe that's where it was. Yep. And we're just going to make this blue. No, I think it was green. And the top is 12625. So now I'm going to have to shrink this down to get the next one on here. Okay, and the entry price on that one was 12,589. Would be 589 about here. That one with magenta. Okay, I'm going to go ahead and modify these so I don't confuse y'all. 5. The spreads always end with the double zeros, so it's pretty easy to read them. Okay, and so now you have 2 long spreads. Long simply means that you bought the instrument. If we had sold, it would be referred to as short. And we'll wait and see what happens here. Again, the green line is representative of the floor price, which is always on the left-hand side of the spread. And the red line is representative of the ceiling price, which is always on the right-hand side of the spread. So if you look here, this is the left-hand side, this is the floor, this is the right-hand side, this is the ceiling. This is the floor, this is the ceiling. I like spreads because they're very, very reminiscent of support and resistance. So if you can trade support and resistance and apply this concept, anytime you expect price to go upward, you're always trying to get in at a level of support. That's support and resistance trading. So if you equate floor with support, okay, then it may be easier for you to understand. If you equate ceiling with resistance, again, it would be easier to understand. In this particular video, just chose to do the long side, which is buying spreads. I'll do another one on shorts, but shorts are a little bit complicated. They're a little bit more complicated for people to understand. They work the same way. The only difference is you're selling the ceiling and buying the floor for profits. I wanted to go over a couple of the scenarios that can play out with these, and it kind of shows you the power. of the spreads. Let's say that on the Germany 30, remember this is the ceiling, so this is going to limit your profit. Let's say that price suddenly shoots up and it expires at 1630. Okay. Your limit on that is 625. So it will be the difference between 625 and your entry price. So in other words, looking at this from here to here is your profit potential. Okay, let's say that it goes to 12,610. Okay, so let's say that price expires right here at 3 p.m. Okay, in that case, your profit is from 589 up to 610. Okay, let's say that it expires at 580. Okay, then your actual risk that you incurred or your actual loss would be the difference between 580 589 and 580. I was making sure I had this right because on the shorts it's opposite. This amount right here between 580 and 575, that is returned to you. So you do not actually lose that amount. It actually gets returned to you. Does that clarify that for you? Now, as you can see, the Germany 30 is just hanging right where the entry was. The Wall Street 30 is trying to move. And normally you will get a move between 2 and 4 p.m. on the indices. It's kind of typical. Again, this live event is only focused on buying a spread. And of course, your risk is the area between the magenta line and the green line, which indicates the floor price where we entered. And your profit potential is between the magenta line and the red line. The red line is also the ceiling on these spreads. Because we are going long, the ceiling will limit the profit, the floor will limit the risk. That's the way the spreads work when going long. I'll do another one that shows examples of shorts, but I think it's better to cover one topic per live event. That way you don't get confused. And remember also that both of these move in full point increments. You will need to do research for the other indices because they move in fractional ticks, which is 0.1 on most of them. And very simply, that just means that for every point, every full point that it moves on the Wall Street 30 or the Germany 30, then it is $1 of reward or $1 of risk, because it's the difference between, for example, this is the entry price on the Germany 30. So the difference between 589 and 575, I think it was right at 14 on entry. These are very different from the binaries because the payout is dependent on where price expires in relationship to the floor, which is at 12,575 on the Germany 30, or the ceiling, which is 12,625. Also remember, when you're looking at the spreads down here, the floor is on the left-hand side. The ceiling is on the right-hand side, followed by the time that it expires. And that's with any spread, not just this spread, but any spread. And again, typically you do want a market that is moving for the spreads. But like in this case, price really hasn't moved, but you have still limited the risk. The bias was to the upside. You limited your risk by using a floor that was close to price. this is a good example right now. Let's say that it was expiration and it expired at 589. Well, you didn't lose anything, you didn't gain anything. You would have to pay the exchange fees, which are $2 round trip. On the Wall Street 30, which uses the Dow Jones as the underlying, if it was to expire right now at this price, then you would have made $6. And the exchange fee, of course, is the same, $2 round trip. The spreads, just like the binaries, can be exited at any time. Um, or you can also set targets like we do on the binaries. For example, on this one, you just pay attention to what your average price is. And for example, let's say we wanted to make $20 on this. We could come in here and type in 25,481, okay? And that would produce a $20 profit if price reaches that area. course, Mondays are typically slow, especially during the month of August. Today has been no exception. And typically when I do a spread, it would be, for example, the market opening when you're expecting more movement. You could also do the 3 to 4 p.m. Eastern time, because you typically will get a small push at the closing if you're trading the indices. But again, you do want the potential for the market to actually move substantially. Is the best time to do the spreads. Do you always know when the market's going to move? Of course not. But you do have a limited risk. And it's like now the market's barely moving, but it is ticking up in our favor. Slowly, but I will do another live event to cover the shorts. Shorts are very similar. The only big difference is that you're selling the ceiling and buying the floor. That's all. In that case, you would be anticipating price to go down. And remember, the ceiling is on the right-hand side. So you want price to be around this ceiling or under it. And then you would go short. And then in that case, the floor would actually limit your profit. The ceiling would limit your risk. For those that are not familiar with the term shorting, that simply means selling the market. And that would be selling on entry, not selling to exit. Now you can choose to allow this to expire. You could choose to exit. To exit, you would simply click on the actual spread, select sell because you are long, so you have to sell to exit, and then you could place order. This is the only time that the max loss and the max profit will not be accurate because you're exiting, you're not entering. These are only valid for entry, not for exit. If you're wondering, okay, what amount would be returned, it would be 44 on the Dow, 20 on the Germany 30. Your position value always shows you If you were to exit right now, what would be returned to your account? And that is the numbers that are right here. Spreads are excellent ways for support and resistance traders to trade the markets, especially when you can find an area of support where price is going to go up from this area. At least that's what you anticipate. So you actually buy it at that level. You want a floor that coincides with that. You don't want to be at the top of the spread. In other words, you don't want to be at the ceiling when you're trying to buy. You want to be closer to the floor. And again, that is simply because from entry to the ceiling would be your profit potential, whereas the entry price minus the floor would be your risk. And this is for long spreads only, meaning you are buying the spread, not selling it. And in this case, with the markets moving as slow as they are, there's only 30 minutes left on this spread. You would not expect price to move up to the ceiling. But as long as it is moving upwards, then you are potentially making money. For those that are not familiar with the Germany 30, it actually uses the DAX as the underlying instrument. It does move in full points. It does not move in, well, I shouldn't say it doesn't move in full points. It moves in, for example, this is 598. When it goes to 599, that's one full point. Even though this has a 0.5, it is the full point that has the value. And it's $1 per full point in the spreads. The same thing for the Dow. Most of the other indices is actually 0.1. So it's like 10 cents. And that would be equal to $1. Again, if you go to the Nadex stock contract specifications, it actually will tell you under spreads For example, the US Tech, the tick size is 0.1. And it's always beneficial for you to review those contract specifications, because on the spreads, the increment size is what determines the value. It's usually $1 per increment size. So on the Dow, a full 1 point move is worth $1, whereas on the US Tech 100, it's 0.1 that's worth $1. Now, if you're looking at this from a risk to reward ratio, the Germany 30 actually did better than the Wall Street 30, even though the Wall Street 30 made more money. From a percentage wise, it was the Germany 30 because it only had $14 of risk versus the Wall Street 30, which I believe had $36 of risk. Sometimes trading the lesser traded market actually can be beneficial. And this is an example of that happening. To give you an example of that, let's say that it's expiring right now. You made $9 and you paid $14 on entry. So 9 divided by 14, you made 64% on the Germany 30. And I would bet that the Wall Street 30 comes up under that because I believe it was $36 on entry, which comes up to 33%. It's one of the reasons you should actually look at some of the other markets. I know some traders get tied to a particular market. The US 500 is one that uses the underline as the ES or the S&P 500. And a lot of people they trade that because everybody else trades it. That doesn't mean it's the best one to trade. And this is where doing your research will help you out. Most traders, if they're trading a large number of contracts, are trading the ES. Why? Because of liquidity. Are you trading 100 contracts or 200 contracts? It makes a difference. If you're not trading, 100, 200 contracts, then why not look at another market? If you're trading under 10 contracts, you can look at just about any market. And again, this is an example of where the Germany 30 spread is outperforming the Wall Street 30, even though the Germany 30 is based on the Dax, which is a European market. It's outperforming the Wall Street 30, which uses the underlying Dow Jones, which is a US. it's 2:30 in the afternoon Eastern time, you would think that the Dow would outperform the Germany 30. It's all dependent on your risk. And sometimes the lesser moving market can be a better market. A great example of that is the Aussie dollar, slower moving market, less traded, but it has better out of the money binaries than, for example, the USD JPY, which everybody trades. If you're trading Forex during the US session, the USD Swiss franc, which moves slower, okay, but you can definitely get better out of the money binaries on the USD Swiss franc versus the USD JPY. And it has the same strike width, which is 4 pips. The British pound dollar, if you've watched some of my other live videos, I was doing some trades on the British pound dollar simply because it had the better out of the money spreads. Not out of the money spreads, out of the money binaries. And really, that's what it's all about. Which one is going to give you the most bang for the buck? If I can jump in the British pound dollar for $25 of risk with an out of the money versus a $40 risk over on the USD JPY, probably going to choose the British pound dollar. Also depends on your setup, though. I also like trading the Euro Yen more than trading the USD JPY. Typically tends to move more. But again, you do have to look at your setup. There's a lot of components to trading. And to me, the major one is your risk to reward, your money management, and then, of course, which market you're trading. Now, with price moving as slow as it has, we entered at 145, which is right in here. And we expected it to go up, and it has. Okay. Very slow moving. Okay. Did it get to the top of the spread? No. But you can still make a profit. And again, the Germany 30 has outperformed the Dow. not because really of the movement per se, but because we were able to get the Germany 30 for a lower risk. On the Wall Street 30, we had, I think it was $36 of risk. So it's trying to get there. Not sure that it will, but it's trying. The good thing about the spreads when the markets are moving slow is if you can nail the direction and get those low risk entry points, you actually can uh, be profitable just when price kind of meanders in your direction, which in my opinion, that's what is going on right now. It's meandering in our direction. We only have about 15 minutes left, and it's slowly going up there. Of course, the other aspect is knowing that typically the last hour of the market produces movement. So trading the 1 to 3 or the 2 to 4 is beneficial. Normally, you do get some movement in during that period. And again, if we go back to our risk to reward, okay, the Dow is at 22 profit. If you divide that by what your risk was on entry, you've made 61%. Okay. On the Germany 30, we were risking 14, which is 64%. Of course, you may say, well, you're only trading one contract. That's only $9. Well, I mean, if you want more money, just have more contracts. As long as you can tolerate the risk. That's just a factor of compounding your numbers or compounding your contracts. And again, for example, on the Dow, if you wanted to take the $24 profit, all you would do is click on the Wall Street 30 and highlight the number that is here or type in a number. For example, let's say that I wanted to exit this when it got to 90. This is where I think it will go. So I could type in 25,490. That is above price, also above where my entry was. And I'm going to do 1 because that would make it an even $30. And simply place the order. If you go to working orders, you can see that that order is there. Additionally, you could do that on the Germany 30. For example, right now, the current market is $5.99. So let's say that I want it at 600. I'm going to type 600 and place the order. Again, do not refer to the max loss and max profit when you're executing an order to exit the position, okay? Because those numbers are not valid, okay? It only works on entry. Now, you see that it took me out of the Germany 30, okay? That means that I took profits on the Germany 30. The Wall Street is not there yet. Now, one thing to warn you about is, let's say you decided to exit this right now. Do not click on your open position. Go over to your working order and click on that one and then select the bid to exit. Okay, that's easy to see because the cell is already highlighted for you. If you do not do that, okay, I'm going to go back in. I'm going to show you what's going to happen. I'm going to click on this and I'm going to say, okay, I want to exit at 482. I'm going to place the order. Do you see that I am now out of that position? But if you go to working orders, your working order is still there. And that means that if this goes up and hits 25,491, that's going to execute a sell order. Okay. You don't want to do that. Okay. So anytime you exit an open position, make it a habit to go over and check your working orders to make sure that you delete your working order. And just make sure you have no working orders, your open positions are exited, and that way you have taken your profits correctly and you do not have that random order still sitting there. So I hope you enjoyed the live event. I hope you learned something about trading the Nadex spreads. This was for buying the spread only. The next live event on spreads, I'll actually show you how to sell the Nadex binary spreads.